So Bank of England has finally cut base rate from 5.25% to 5%. It is great news, but I personally do not expect to see much more over the remaining months of this year. It is the first cut since 2020 and a knife-edged vote, with the Monetary Policy Committee voting 5-4 to reduce the Bank of England base rate in this week's meeting. The MPC was deeply divided over the mood, and I think this was kind of wise for many, with inflationary pressures on a service basis being in excess of 5%, although the Bank of England's base rate target has been met in May and June. So, announcing this decision, the Bank of England have cautioned that it will not see a rapid succession of further cuts, and inflationary pressures still do remain. And I personally believe, with the Labour government making pay announcements in excess of 5% for many, and for many they are well deserved, this would lead to inflationary pressure, and therefore I think underpinning base rate will kind of be around 4.75. So for me personally, investors should only expect to see another 1 or 2 base rate cuts this year to around 4.75%. So what are we seeing with mortgages? So basically 5-year money with swap rates have dropped to 3.81% recently. So what that means for you as the borrower is that there will be a margin over the cost of swap rates to determine what you pay for your mortgage. So recently, in the last week, we have seen one lender offering 5-year fixed rate money at 3.99% on a lower loan to value at around 60%. I think it's probably going to get a little bit better, but only marginally. And I don't think we're going to see super low rates that some of us were hoping for at the start of the year. The Bank of England's decision is the latest sign of growing confidence among central banks since the post-COVID price jump with inflation. Earlier this summer, the European Central Bank was the first major bank to lower rates. This week, the Federal Reserve signalled it could cut borrowing costs as soon as September. So what does this mean for you? Well, if your mortgage is due to expire in the next 6 to 8 months, now is a good time to plan for that. Speak to a professional. We're here to help and review all of the options are available to you. And if you're still struggling with your monthly mortgage costs, have a look at what options exist, whether that's switching from, say, repayment to interest only, taking a payment holiday, seeing if there are any friends or relatives that could go on to the mortgage to give you increased income, to see if you could switch from a standard variable rate to a cheaper option. But always, we're here to help, and thank you so much for watching, and we look forward to speaking to you very soon.